Good afternoon, everyone. We're going to let the folks on YouTube watch the close, and we did tell our members we've been cautioning for several days now, but and in particular, focusing in on the 15th today. What is special about today? Today is an options expiration day, and what happens? It happens every quarter. Anytime we have a market that has softened up, sold off a little bit, 2, 3 weeks in front of options, the option players, the hedge funds will come in and they will exploit it. They will get long calls in the options in a big way. And they manufacture what is called a gamma short squeeze. And when they leverage in like that, they force the broker dealers to have to buy stock. I hate to say it, but the suckers around CNBC and everyone gets sucked in. And then as soon as the options their profits have been realized, then you get the giant sucking sound, an old phrase from Ross Perot days, right? And if there's no more gamma squeeze, then the broker dealers have to sell this shit. They got to get rid of it, get it off their books. So, we cautioned last night that although some of our systems were long, we were picking up on very poor breadth. We had what we call a false low on the VIX. The VIX is still relatively muted but long today. But a false low in the VIX and a rising skew. That the big money, the really smart money, they were selling call contracts to the speculators, taking that money and getting short the market. So we were a little bit surprised that the market opened as soft as it did this morning, but not at all surprised that we're selling off this afternoon. And I think we'll see, we think it could get a lot worse. And if it does finish on its arse and accelerates into the close early next week, the last 2 weeks of September could really be something. The market isn't braced for this. The VIX is they're just way too complacent. What might the catalyst be? I'm not sure it needs a catalyst, but one might be the Federal Reserve on Wednesday. And I think it's going to be, if you are long this market and have not protected your profits, selling calls against your positions, selling half the positions, raising some cash, getting short and some other speculative stuff, then you could take one on the chin. This market won't this is fast, so they won't pull any punches. I mean, they'll pull the plug fast. So it's only 125. When we take a look, I'll highlight this for you, and then I have to break away and then be back. If you have any questions, you're always welcome to visit the site. You're always welcome to email. We're not giving out specific recommendations, but we are, as we go in a live environment from day to day, giving our members a vantage, a viewpoint of the algos, and also some experience and having seen this play out dozens and dozens and dozens of times. And yes, it's a quarterly type event, but we've seen plenty of it. So let's take a look. Let me mark this up for you. We come first to the 5-minute VIX. And here is I'd say we'll make that a little more pronounced using the zoom tool. Here is the VIX, which is warning our members at 8 a.m. that this market just might be selling down. Now, it seems to be that it was reacting to the ES because the ES at 725 started to sell, and it has been a straight shot down and doesn't appear to be done. One mini contract, you're up nearly $3,000. Now, that's quite a bit of money and a fair amount of leverage, especially before 9 o'clock. After 9 o'clock, it's only about $1,800 in leverage, quite a return, right? But you do have micros, right? You can use micros. You could use options. So we like to use the futures and then check out the NASDAQ. At 305 this morning, $6,000. How about the Dow? They're going to get them all. 750 is $2,000. How about the Russell? 710, 1,400. $3,000, $9,000, $11,000, $12,000, $13,000 in available profits off of Swing Machine. Does he get them all right? No. Does he help you stay on the right side of the market? We think so. It does for us. Your job, our job, isn't to get it all. You're not going to get it all. Nobody is. We just got to get our portion. And we put here as a reminder, I hate to break it down to a per day, right? This is not an hourly job. This is not a per diem job, and it is a job. Our job is to get the fish in the boat. So out of all these profits, hopefully you weren't doing too much buying. If you were, you probably had a rough day. But $100 a day is $2,400 a month. And you don't have to be here all day, every day. This trade here that's on is locked in. It's locked in. It's a guaranteed winner. So we're guaranteed. Now we didn't set the world on fire here this morning. We were trading something a little different. Well, actually a lot different than Swing Machine. We weren't trading that. We were trading something different. We're going to continue to trade that different something next week. Actually, we were trading range bars. I haven't worked with range bars as much as I probably should, and we have a number of members that are, and so we're giving that a good, fresh, hard look and trading it both mechanically and robotically, and see what we can do there for the benefit of all of our members. So we'll try to videotape some of that next week. If you have any questions, though, feel free. Again, we don't get them all. This is not, we had a note up here, we're not presenting these tools as some sort of holy grail or some sort of iRobot or some sort of gimmick. It isn't. They're tools. They're trading tools. We have close to 65 to 70 of these tools. Can't use them all, right? You don't need to use them all. You need to find a mechanical approach that suits you, your trading personality, your trading account, the markets that you're trading. And then you need to have the time, the discipline, the patience to come in and execute. What I do doesn't matter. Doesn't matter. Do we have members that captured some of this or more than this? Absolutely. No question about it. We have members that are trading. My size is usually a mini contract or two. When I say two, maybe 2 to 3 markets at once, but usually about a mini. Sometimes only half of a mini. I can break it down into micros. Do we have members that are trading larger than me? Absolutely. And if you had traded 10 minis here, yeah, there'd be 30,000. If you traded 10 minis here, it would be 60,000. Do we have the firepower to do that? Yeah, but I don't need to do that, right? Now there are other, we have some members that have said, Don, trading one mini isn't enough to even hold my attention. They're in a different place. They did different things in life. That's okay. It's all right. And on the other side, we have members, if you had traded one micro, you're up 300. You're up 600. You're up $216. The process, the steps are the same. So you don't want to be over leveraging or have higher expectations than one should. You have to start out small, consistent, objective, and know that the performance in this is lumpy. It is very lumpy. So it isn't, it's like no other profession, and it is a profession. It most certainly is. It's an acquired skill set. So enjoy the show. We think this thing could get really nasty here into the close. We'll see. We have a guaranteed winner on this. We have a guaranteed winning position on the day. So we're just gonna we're gonna stay out of its way and see if we can get a really nice outsized positive outlier, albeit on the sell side of this market. And if you doubt the message, we posted it on Twitter. We said brace for impact. It was, I mean, it was there. So, and you can't second guess yourself. Do we have short contracts on? Yes. Do I feel today as though I put on enough? No. No, I didn't. So you never get it all. You never get the very bottom. You never get the very top. You never get the precise leverage precisely right every single time. But as long as you can stay patient and disciplined and keep yourself in the game, you will have some nice positive outliers. And what we don't want to have is get impatient, disorganized, emotional, and put down something, put it all on something and have a blow up. No negative outliers, zero, none. You just can't do it. Okay, so I hope it helps. Good luck, everybody. Enjoy the show. By the way, it's been suggested that we play some music in the background. What happens is we get dinged by YouTube for copyright infringements and stuff. So, so do we have a subscription to Spotify and Amazon? Yes. And so we love to listen to some music, audio, podcasts, things of that sort. But we're not gonna we don't want to run afoul of their copyrights. So, by all means, you can play some music in the background. What we're not doing is, I'm not going to be beating my gums and just, talk your ears off. Probably did a little too much of that this morning. So enjoy. Let me show you though real quickly, for those that didn't see this yesterday. Let's put the VIX on a daily, and the VIX was down in here, overly complacent. It really should be a little bit higher. Let's put the the S&P on a daily, and let's see where we are. So the market is not in proportion. In our view, the VIX it depends upon how you look at this, and we're going to get a chance to see. It's still either overly complacent or the market is overreacting. The market or the VIX should be over here, should be up in here, in the market would be balanced in proportion. So the market on a daily basis is certainly headed down. It's below its mean, but the VIX is still very complacent. Now that could be because it is options expiration day. And so we may get a better view of that later in the day and on Monday or Tuesday. We would want to see the VIX up in here. And if in 5 or 10 days from now, 15 days from now, we see the VIX in euphoria and the market panic selling, and everyone on CNBC and everyone on the Twitter sphere is saying, sell the market, it's crashing, sell it, sell it, sell it. Guess what we're going to be doing? We're going to be closing our short option contracts, and we will, in fact, buy the market. We're traders. Hey, so it's going to be real interesting here. If this accelerates, we would expect to see the VIX really start to tip its hand and see all those calls coming offline and the puts building, bracing maybe for next week. We have a trailer on this trade that it's in right now. It's trailing about $500. So we've got a guaranteed winner of about $1,000, which would put us up for the day about 1,300. We were using range bars and a kind of a concept strategy that really doesn't have a name right now, but we still going to be working with that a little bit next week. It needs work for sure, but it is interesting to look at too. And we'll keep everybody posted. But I think things could accelerate. We're going to get to the 3 o'clock hour, and we want to see this last hour options expiration and see if they really pull the plug on it. They could. We are right on the low end of today's range on the Nasdaq, and it's breaking it as we speak. So this thing could really, the bottom could fall out here, down here, right where we are right now, right on this 360, 465 area. So we have a trailer and it's doing its thing. We're guaranteed it's trailing about $500, give or take. And so she keeps falling, we'll keep locking it in. She comes sucking back, we'll be out, and that'll be the last trade. We look at Swing Machine, 8 o'clock. The VIX gives a tip off, a heads up that we might be in trouble. The ES had already on a 5-minute had turned down at 7:25, nearly 7:30. The NQ was at 3:05, 5 minutes after Europe opened weak. So we're looking at 3 grand there, 6,700 on that. Again, don't have to get it all, just get a portion, just a portion. Even if it's 100 or 200 or 300 a day, don't beat yourself up. Don't try to be getting it all. 750, the Dow goes to the Russell giving it up at 710. So they came in, they were selling with a vengeance. We do think oil up here at 90.50, 90.60 on a daily basis is a little bit overdone. We would think that oil is going to come in. If I'm in going to be trading oil in the ETF world over the next, 20, 30 days, I would be looking to fade the energy sector. I would be looking to fade it. Might do it with put debit spreads. Ideally, do it with call credit spreads. Build yourself in some cushion. Not looking to hit a home run ball. Just looking to affect a trade on what could be a pull in on oil. So you might want to pen that. Make a pencil note. The likelihood of where we will be. Let's put oil on a daily. There's no guarantees, but we're up here at 70. I think the likelihood that we trade back down to 85, 86, as opposed to going much higher, I think is much more probable. Look at that signal though. 50 days ago, a long oil contract at 73.44 and held for 50 days is 17 grand. Let's just take a look at the hourly while we're here. Let's take a look at the hourly signals. 5 hours ago, the S&P goes short at 45.10. This is on an hour. Let's take a look at the NASDAQ on the hour. 6 hours ago, 10 a.m., 11 a.m. So just getting started. These hourly signals will not turn around, in an hour or two. They can stick around. We have seen hourly signals at 12. So something is going on here late this morning, and we think it's a function of the options market. They can last. We've seen hourly signals last for 2 weeks and 5 hours. So, you might want to snap a picture of this and look at these hourlies, and let's see where they are, next week, 10 days from now. You might look back and say, man, we could be a whole lot, worse off. Can't get, nail them perfectly. And you have to be prepared to understand what it is you're doing and what you're trying to do. And if you're trying to go out days or weeks, you have to back off the leverage, maybe not use any leverage, and or define your risk by using options. Let's just take a look at the VIX on the hour. And what does that show us? And it's trying to get long right now. So it's responding to it. It didn't give us any advance warning, but it's responding. Okay, but you don't come into an hourly signal and try to trade it 5 minutes later. That's not what we want to be doing. Don't try to do that. We'll put these back to 5 minutes. So we look at the amount of money, 3,000, give or take. Let's call that 10,000, 12,000, $13,000 in profits on the short side. 13,000. Your job is pick one of these markets, come in with modest leverage, commensurate with your trading account, and get a little bit, and then shut down. Come in, get it, shut down, and we'll come back and do it again next week, and the week after that, and the week after that. You need to just take your time. Don't try to target money. Don't try to, I got to get to $3,000. I got to get to $5,000. I got to get my account from 5 to 20 or from 20 to 50. Don't start making decisions on the money. You have to really, really work at that and just become mechanical. Over time, it will work for you and you'll be a whole lot better off. The money will come. A lot like golf, if you're hitting the ball to the right, an amateur golfer will try to aim left. The more he aims left, the more he hits the ball to the right. And he aims more left. It starts yanking it to the left. And the ball does what? It goes more to the right. Just does just the opposite. You start targeting money, it won't be good. Won't be good. Now we usually leave up here the position window, and the position window in our cache, the computer memory, we had too many programs, was getting stuck and leaving it. So it was a bit of a distraction, but we have our trade window down here. And maybe I should circle that. Let me do that. And this doesn't get stuck. I don't know why TradeStations thing does that. So we'll just put that in blue. This is unrealized, meaning it's active. We haven't realized that when we close the trade, it will become realized and will accrue to that number, add to that number. Now we have a guaranteed winner, and I know I'm trailing about $500, so we're guaranteed about 1,200. So there's no reason I don't have to, just, it is what it is. It's just another trade. They just, I don't want to say they don't matter, but no individual trade. I cannot remember much of any of the individual trades that we had last week. I just can't even remember them. We trade too frequently, and not every minute of every day, but and we're just trying to get a portion. And now, I do have an advantage in that I have all the time in the world today. I can be here any day, every day. I can be here as early and as late as I want. I don't have that many intrusions. That wasn't always the case, right? That wasn't always the case. I was always trying to, do other things for other people, namely, working for the man, right? I spent a lot of time in surgery, and I can remember, trying to get back, finish a case. I'd be watching the clock, being like, man, let's finish this case. It's 10, 11 o'clock. I could be home by 1, 2. I could do some trading. And that was a hard way to go. So if you find yourself in that environment, the only thing that I would say is, you want to become as disciplined as you can. You know your schedule best. You know when what time you have available. And I would try to structure that time each and every week. I wouldn't leave my trading to the whims of whatever else it is I'm doing. Meaning, I wouldn't set out if I was still in this surgery arena. I wouldn't set out to trade around that, like when I have time, and I'll come in at 2 in the afternoon. I would be trying to carve out as best I could what time I could, even if it's 1 or 2 days a week, a certain window, and I want to have no intrusions on that time, no conference calls, no no intrusions. And I would prefer that time to be early in the week and early in the day. Now, we're here on a Friday. I don't think if you only have 1 or 2 days to trade, that Friday is the best of days. And the reason for that is that it just, you don't have the week is wrapping up, so if you can start early, if I can just say that, and you only your schedule, but you don't want your trading to be just it's fine that it takes a back seat or even a tertiary seat to other priorities, but I don't think it should be treated lightly. I don't think it should be like just, oh, I got a couple of hours today, so I think I'll get in there and see what I can do. That's not going to get it done. Not week in, week out. And you may not be the best trader that you could possibly be. If you only have 2 or 3 hours on a given day, or 2 or 3 days, that's what you have, preferably earlier in the day. Then from there, start choosing what markets do I want to watch how do I want to trade these? What do I have to do to get done what I need to get done? And start getting really, really disciplined about it. We can try to help you, determine that a little bit during the Q school, but it's and your schedule will change. I mean, it will, hopefully for the better. one of the things that we will do frequently is be running a strategy, and it puts us in, and maybe we're up for the day, a little bit, and have some cushion, and then it puts us into a decent trade, and we think we have the dominant trend for the day, and then we'll go ahead and suspend the strategy, turn it off, no sense over trading, and set ourselves a break even stop or a trailer and do that. And the way we'll do that is we'll use the matrix at TradeStation, and then just let the bugger run, let it run. And in that way, what can happen, there's no guarantee. I mean, most of the time it's probably going to come back and tick off the trailer, and you're only going to make a little bit, but at least you make a little bit, and it adds to your profit for the day. But if you're in here, doing it religiously, over and over and over again, every once in a while, maybe today is going to be that once in a while, we hit an outlier event, but we'll be on the right side of the market. And what do we want? We want a positive outlier. And we just let the bitch run, excuse the French, and just let it run. And what we don't want negative outliers, so at all, right? We just keep those, clipped nice and tight. So if this market does, I don't know if it does fall apart in the last hour, we're going to know soon. We'll be in position. If not, this thing's going to trail out, and that'll be it. And that'll be that. We gave it a shot, gave it a go. But so it isn't, it's not an all or nothing. It isn't robotic trading every single trade, every single day, I got to get that, perfect something running. It isn't. And it isn't, mechanically trading every single day. I gotta grind on this. It's a little both. It's a little both. And hopefully the machine can help your trading become better, and hopefully your own trading can become better. And that's what we're watching with a very keen eye. We're watching these range bars, in which we haven't focused on in a big way. And so we're going to be focusing on them a little bit more. And we're watching the dynamic range. The dynamic range, and it seems to make sense that if we're going to use range bars, maybe we should use our tool, the dynamic range. And so we're using a couple of other tools, a couple of other programs, and seeing what we can see, and we'll build from there. Makes sense? I hope so. And we had mentioned just a short time ago, we have the low end of the range on the NQ. We can see it at 15,365. And it was just a short time ago, and it was trying to get underneath that range. It was trying to get underneath it. And it did, but not for very long. And then it came right back up. And what does it do? It goes right to the middle range. And it made a nice run there from 365 up to where we are right now. Well, actually, we're under it a little bit, 385. And it looks like we're going to probably get tagged out, because it's looking to us like they might run this. Now, where's the top end of the range for today? We have it marked at 15,404. 15,404. We're only 25 or 30 points away. We're right now right in the middle. We set our dynamic range. The range bar that we're using is small. It's 5 points, 5 point range, and we set a dynamic range bar at 50 to go back 50 bars, gives us a pretty good view. All these computers are doing is, when you stop and think about it, which we don't think about it too much, but they're just probing each other. These hedge funds have programs, and they all do. And they push in one direction trying to find buyers, they push in the other direction trying to find sellers. And it's all mechanical, it's all robotic. It's got nothing to do with the fundamental of anything. It just doesn't. Now, I'm not saying that there aren't people or institutions that are holding positions based on a fundamental something for 2, 3, 4, 5 years. They most certainly are. They would probably be the very first people to say that the price action during the course of a day or during the course of the week is just noise. It is not of any interest to them. And that's fine. What they're doing is of no interest to us. It's a different game. I will say this, though, for those that are investing over 2, 3, 4, 5 years, you're going to do a lot better if you're using range if you are buying off the low end of the range, which is where most people will be selling. And similarly, you want to be selling at the high end of the range. We just get a lot more practice at it because we're doing it intraday. They get a shot to do it, maybe once every, few years on a given something. We're doing the same thing. We're just doing it much more frequently. We're doing it with leverage, but smaller sizes, and we're just more active. It really isn't that different. And we give you a view and we discuss it. They're not going to tell you shit. you know, the money managers, they ain't going to tell you crap. They're not going to show you nothing. They got their super secret, super smart, research crack teams, that are a bunch of laid off Wall Streeters. Yeah, nonsense. Okay, so we're approaching the 3 o'clock hour, and right after 3 o'clock, we're going to get a really good idea how they want to be positioned going into this weekend and how they might want to be positioned after the options expiration. And we think, we've been saying they're going to pull the plug on this gamma squeeze, this long gamma squeeze. They're going to pull the plug on it. They're going to close out what they got rapidly. Maybe 4,500 was the number. And the broker dealers are going to dump the shit. In the retail crowd, they're going to get what they get, in the IRA accounts or whatever. It's the traders that are pushing this around day in and day out, week in and week out, that isn't of their concern. Their concern is getting the biggest punch out they can get for their firm. That's it. I wish it was something different, but it isn't. Now, this is interesting. I'm gonna hear this, but I'm seeing something, and this lady's pretty good. She's okay. Her name is Abigail Doolittle, and she's saying stocks down on this triple witching day, plus a look at the skew index. We were talking about that. We said it, last night. I'm gonna hear what she's got to say. Okay, we're going to let you hear this. Her name is Abigail Doolittle, and she does appear on CNBC once in a while. She's named the Chartress, and she's fine. I mean, she actually is fine. And we're going to play this for you. Now, we've been talking about this for years, and we pointed out real time. So here you're going to get a chance to hear. I'm going to play it.
Abigail?
Yeah, there's a fair degree of a sell-off here, Alex, kind of out of nowhere too. I think that
No, out of nowhere? No, not exactly. No.
the only thing that I can pinpoint it on is perhaps the fact that it is triple witching. You don't always get this kind of volatility on a triple witching day, but today it does seem that we have some.
That is true. However, it usually comes in immediately after the day, usually that Monday, or sometimes we see a break right at the end. So it is unusual that it started so early, which tells me there could be even more of a concern. But she's correct.
Big declines. To Alex's point, take a look at the underperformance for the Nasdaq 100, down 1.5%, also down on the week. The S&P 500 hanging on to a small gain. The SOX down 2.4%, down nearly 2% on the week, and the Russell 2000, it's down 1.1%, also down on the week. So this is shaping up on today to be a bearish week. Now, one of the pressures, of course, are yields. Alex mentioning that the yields are up a little bit today. When we put it into the context, though, of where we've been over the last year, we can see that we have this 2-year yield back above 5%, climbing.
Okay, so now she's searching for a reason, an explanation, and which doesn't help anybody, it really doesn't. We've had an inverted yield curve since November 9th, and they reach for the most obvious, which is going to be interest rates, which also will set up for a conversation next week about the Fed. But it just is what it is. I mean, if there's a forest fire, there's a forest fire. You don't ask, just exactly where it started, why it started. You just get yourself protected.
Climbing higher, 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 making everything look more expensive as money conceivably comes out of the system. Now, because it is triple witching day, let's take a look at a chart that has to do with options. Now, this is the skew index. Traders absolutely hate it because it's not very predictable. I happen to like it.
Yeah, I don't know where she says traders absolutely hate it. I'm not sure about that. I think what it is, they don't understand it. And but she goes on. Let's hear what she says.
As a market observer over the last few years, back in 2015, it spiked well in advance of the sell-off that we saw in 2015, 2016. Take a look at 2018. In the summer, it peaked, and then we had that massive sell-off that fall. In 2019, right ahead of the pandemic, it spiked. We recently spiked. We're coming off of that, guy. I think it almost begs the question of whether or not we have some more serious selling ahead this fall.
Oh, yes, we do. So So she doesn't explain what skew is, but skew is a marker for us, and we track it. It's not a great timing tool, but it does tell us the sentiment and how they're positioned. When skew is normal, skew is between 120 and 130, and it's just a balance between call buying and put buying. When skew is below 130, down under 110 or 120, 115, 110, the perception is that the market is overly or is bullish. Let's just put it that way. It's bullish. When skew is over 130, 130, 140, 150, 160, it is bearish. They're not buying calls, they're selling calls, and they're buying puts. Now, where the interpretation comes from, it depends upon where the market is when you read the skew. If the market is down 10, 15, 20% and down on its arse, and skew is very, very low, then you know that it's time to start buying. But when the market was at its highs over the last couple of weeks, and every time the market would go up, the skew would go up, that would tell us that the smart money they were using the perceived strength in the market to get defensive. That's why this move down isn't a surprise to us. And if you look on our Twitter sphere, I won't post it here, but if you look on our Twitter sphere, we've been talking about it, we posted to our members last night. Yes, the market is at its highs, and yes, the trend is up, but the VIX is signaling a false low, and the skew is generating some concern, and it's a bad combination. And we said brace for impact. I thought it might come later today into a Monday, so we missed it by a few hours. They decided to come get them now. Okay, so the order gets tripped off. So we're done. We're done for the day. We're in the house with 1462 off of the high, but we're in. So we won't try to squeeze out anything more. But we'll let you watch and we'll see how it plays out. Will get very chaotic here in the last hour of options expiration. There's a lot, that 4,500 number, is kind of, going to determine hundreds of millions of dollars. If you go back on YouTube, we just said a moment ago that the support level, the bottom of the range for the NASDAQ was 15,356. We were trading just above that. We said the mid range was 15,380. And we said the upper range for the day is 15,405. And that's just about where we're at. And are we going to punch up through it? Keep on going? I don't know. We're not going to trade anymore today, but it's been range bound. So if you're going to trade range bars, it might be a good idea to get your range-based tools on those charts so that you can see get a clear view of the range. Pretty sweet trading today. Okay, so our grade for today is fine. It was feeling, mostly robotic and mechanical. Since midnight, we have a profit factor of 1.45, 1.45, 24 trades, 50% winning, right? And but 1.45. That's how we want to grade ourselves. I think we could have done better. Um, Average time in trade, 39 minutes. I don't think you want to grade yourself on the money. If you grade yourself on the money, you become very emotional. That's not good. So this is a pretty weak finish to a very weak week. And they're trying to maybe stick this 4,500, land it. The markets will still be open from like 4 to 4:15 or so, but we're thinking that this is going to probably carry through. We're not saying that we don't get a little bounce Sunday night, maybe a little thing Monday, but next week should usher in some pretty significant volatility and probably some real significant selling, we believe. So, but again, we're gonna, for our option trades, they're looking good. We're trying to hit the broad side of the barn. Our futures trading is surgical in nature, and we trade what's in front of us at that given time. So if you have any questions, be sure to visit the site. Feel free to email, and you're also welcome to call. And we wish everyone the best. We'll let you watch, and we'll shut down at about 4:15. Everybody have a great weekend. Hope you had a great week.